Yo, what's good, guys? Welcome to Traders Reality. Now, this video has been requested by a lot of the new people in passing through to the channel. So mad love and respect for all you guys, all the new subscribers passing through. Be sure, if you are watching this video and it's your first time, subscribe to the channel so that you can get in line with the daily updates when we're catching the New York session at 2 p.m. GMT and of course later on in the evening at 10 p.m. GMT. So this one's for the new guys. Why am I always saying that price is irrelevant? It's simple, really. When we attach the idea of value to something or belief, we tend to be geared towards sticking to that. Okay? It's like when you see a brand new car. The second you drive it off the forecourt, it loses its value. Okay, so what you paid for it, you've now just lost a big value in that car because you've just taken it off the forecourt. All right, and that's the same concept with everything in our world today. Everything depreciates and Bitcoin depreciates. You lose value all the time because it goes up and it goes down. The only time you should really be concerned about price is when you decide as your own trader, investor, holder, whatever you are, what price it is that you brought it at. And if you're going to decide to sell it, what price will you be selling it from? Is it from a positive point or is it from a negative point? Are you going to take a win or a loss? That's the only time you should care about price. Now, in relation to the streams and trading overall, why is it that price is irrelevant? And why is it that it's so important you're aware of what the candlesticks do around price? So let me break it down to you right now. In front of you, you can see the 37,000 zone. All right, so let me just mark that off so it's clear cut that you guys can see this is the 37K zone. Now, we talk about the market makers all the time. And again, for the new guys, who's the market maker? He's the liquidity provider. Okay, if you go to companies like TradeStation, Binance, Crypto.com, or any company that provides the exchange or gives you the flexibility to be able to open and close trades, they are being sourced by liquidity. All right, and the liquidity is the market maker. You've seen me many a times talking about it. You've got the retail trader here and you've got Binance, for example, right here. And then, of course, you've got the market maker right there. You ask Binance, you want an order of 125x long in Bitcoin. You ping that over to Binance. Binance instantly pings that over to the market maker. The market maker brings that order back and gives Binance the order. And then you get the long order whilst the market maker is building the short behind it. All right, because you can only go long if someone goes short. That someone is the market maker. Because what if you're a trader that has millions of dollars to place in a trade? Do you think they're going to try and find someone who's got exactly the same amount of money as you? No, that's why Binance facilitates the transaction, charges you a limit or a market. Okay, and you get the end result of a fast transaction and you're now in the marketplace. Okay, the market maker is the only liquidity that's going to be able to sustain the amount of clientele that Binance has, and with every exchange as well. So keep that in mind. All right. So what is it about the price and why I'm not interested in Bitcoin's price and what the candlesticks do around it? Well, we need to understand what the market maker does at price so that we can try and work out what he's likely to do in the future at the same zones. That doesn't mean the same price. Okay, in a few moments, I'm going to show you previous pictures of us taking screenshots of Bitcoin's price action before and after. And you'll notice that they're doing exactly the same thing, but price is irrelevant. It's what they do around it. So here we go. This is the 37,000 zone. Now, we know the market maker likes to build his shorts whilst price is rising, okay? Because when he's going short, the retail trader is taking the long because he's going long because everyone's talking and everyone's pumped up about the idea of Bitcoin mooning out or going to the upside. So in order for you to go long, the market maker sells you his short. Now, you understand that behind every long, there is a liquidation point and margin that you put up. Okay, and the idea is that the market maker is going to try and take those zones later on because he's been giving you the liquidity for you to go long. Because then when your long is in a profit, where are you getting the liquidity from to close it in a profit? You're taking it from Mr. Market Maker because the order that is against you is a short. Okay, Likewise, when your position is going against you and it's in the red, that's the liquidity that the market maker can take at the point of you selling. Now, if your liquidation point gets hit, the market maker doesn't only just take the loss, he also takes your margin at the same time. Okay, which is why leverage trading is very, very difficult. If you don't get it right, you're going to get burnt. Okay, so we understand that the market maker moves price to the upside. All right, and he's building his shorts. How do we know at what point he's going to stop building his shorts? Well, you've noticed many a times that Bitcoin makes a move to the upside and he does it over the whole number. All right, so the market maker likes to build his positions above key whole numbers and half numbers. So when I say half numbers, I'm talking 37,500, 38,500, you get the idea. But the bigger moves tend to happen above the whole numbers because people that put orders into the marketplace, especially institutional traders, they're doing it at whole and half numbers. They're not interested in Bitcoin right now at 36,136.72. It's a stupid number. There's no reference to it. There's no relevance to it. However, when it goes through that number or comes towards it, it's a psychological impact on the marketplace. Like when people say Bitcoin can't go above 50, Bitcoin can't go below 20, they're always going to be round numbers because psychologically they have an impact on us. Okay? So the market maker brings price up towards the upside by trapping the traders to believe that it's going up. Then the market maker decides to contain price and does this sort of behavior. All right? And then one moment you'll see the market go up and then straight away you're going to see him mark price back down and he's going to come back to take back all the liquidity that he has provided for the guys who went long, okay? And he's built them as shorts. Now, the reason he does it above the whole numbers is because that's the best place for him to get the best fill when he breaks through it. As I've said to you before, if you go back in the charts and pull off any whole number, okay, you will see a vector candle appearing in that range. Here's one for you right now. Look at this. Now remember, the market maker is bringing price back down from a bigger move to the left side of the chart. Vector candle appearing at the 37 zone. Okay, we keep on looking. Anywhere else where there is a impact on numbers. So let's come over here and I'll show you another example. So let's just take a random number. Let's take 50K. All right, let's pull up the 50K and you should try this exercise as well. So look at Bitcoin at the 50K zone. Here we go. So there's 50K. Look left, look left. Oh, funny that is. That's no coincidence that at the 50K there's green vector candles where market makers try and build their shorts above key notable areas to contain as many traders as possible with the commitment and belief that price is going to go higher, and then he initiates the final move to the upside, traps them, keeps them committed because they believe it's going to moon out to the upside, and then he brings it back down with aggression and takes out the 50K zone with yet another vector candle. Okay, let's go back again just to solidify the understanding in your minds. Here we go. Look at that. Push up above the 50K zone, building the shorts above the key notable area, smashing it back down again. Red vector candle, green vector candle, red vector candle. Do you get the idea? It's no coincidence that they do it at that point. This is how they build their shorts and their longs in the chart. Do you see why the relevance of understanding if Bitcoin should be 30K, 20K, 15K, it doesn't matter. All we need to be aware of is what price does around that zone so that we can understand what he's trying to do. Okay, so if you look at this chart right here, you can see the play right there. It's an M formation, all right? If we look at what it did beforehand, you can see right here, no, not that one, this one right here, okay? So this was the before zone. And we were trying to understand what were the chances of price coming down. Now, people were like, nah, Tino, it's not going to happen. Yeah, this was it, the 27th, right there. Okay. Look at what they were doing. The key 50K zone right there, as you can see, well, it's just slightly above it. All right. Key 50K zone. They were building the short. So we've got the market makers push 1, 2, 3 hits to the high, then a final spike to the upside to commit the retail traders that it's going to go higher, because what do you think they're going to do? They're going to buy the dip. So the market maker provides that option. He lets them think that they can buy the dip because he knows he can get more shorts filled at higher prices so that when he does decide to release them down to the downside, he's going to have the liquidity present in terms of the vector zone, liquidation points. And this is how this projection played out. You can see right there, it worked out a treat. Walked all the way down. And look what he did here. He initiates one last attempt to the upside because everyone was saying that it's going to go up from this point and then it drops to the downside. Please go and watch the stream on the 24th, I believe. Okay, between the 22nd and the 24th and the 27th or the 26th. In that week right there, I was doing several videos over the Christmas period. Okay, that's just to help you understand what they do around whole and half numbers. Okay, so again, look at what they're doing right now with Bitcoin. And I'll be talking about this tonight in the stream. What do you think they're trying to do? Are they trying to run the shorts to the downside? Look at the key 37,000 zone. Are they building the shorts at the highest possible point so that they can get the best fill when they make their way down to the downside so they can come back down towards these zones right here? Yeah? This is what we're trying to establish. Now, when you come to the charts yourself, a best practice for you would be to highlight the key whole numbers in the chart. Okay? Pull up 37, 36, 35, 34, all right, for the given range that we are currently in, and just observe what they do at those zones. Likewise, when they're doing it below the key whole numbers and half numbers, the principle is exactly the same. Just look, they build above the whole numbers, so above the 37 zone, and they even tap the 38 zone at the same time. Okay? Look at that. Every time they come up towards a whole and a half number, they're going to break on it with a vector candle. All right, there it is right there. Look, break out with the vector candle. What I'm saying to you is these are the points in the chart where they're going to do something interesting. They're going to push and influence traders to commit. So this is why I don't care about price or what someone believes Bitcoin should be. Because ultimately, look at what they did here, okay? And look at what they did here. Can you see how this move over here, right there, which is the screenshot of this area right here is no different to this area right there. Yeah, can you see it? Big drop to the downside, retrace back up above the moving averages, can't go above those zones, stay destabilizing, bring price back down, retrace back up, and then drop to the downside, and a final attempt to the upside just to contain more liquidity in this area here so that they can get more shorts built above the key zone that we were working in that range, which in that instance was the 41,000 and the 42,000 zone, and you can even include the 43 there as well. Okay? If you're getting confused about it and you can see, well, hold on a second, Tino, you're saying, is it above the 41,000, the 42,000? Which one is it? Well, when you mark off all three, you will see where most of the activity is happening. Yeah? So if we pull up 43,000 right here, for the nature of the demonstration, 43,000 right there. And then we can get 42,000 right here. So we'll change that to 42K. And then, of course, we will include 41,000 here. What are you doing, man? All right, then. So, there we go. So you're saying, what would I do in this zone, Tino? How am I meant to know what to expect from it? Well, look. Where are the most notable areas of the candlesticks? Are they to the downside or are they to the upside? What are they doing more of and not following through with it? Because look, you can see that they tapped this zone right here. 1, 2, 3, 4 times they hit that range. But because it was during a downwards movement, okay, and the move that they attempted down here was very sharp and they finalized on a wick, when they brought price back up, and especially that it's got a stopping volume zone right there, they were trapping all the shorts to the downside because they were building their longs, and they quickly came out of that range so that they can realize a return on their longs, okay, whilst trying to get more shorts in the range as well, because the consensus is Bitcoin was dropping down. So people's sentiment was, it's dropping, I need to open shorts, okay? Market maker reverses it back up and takes the liquidation points for the shorts that were opened in this range, and he does that so that he can profit on the longs that he's been building off the backs of you guys who are going short. Okay, when I say you guys, retail traders like us all, okay, banks, institutions, you name it. All right. Now look at where they move price and how they keep it above a certain point, but they don't really break out anywhere. Look, you got one push, two, straight through the 43 zone, and then they stall in around here. We see a notable pattern that we always look for every day, the M formation, 3 hits to the high. They drop it back down aggressively. Again, at the 42 zone, they prevent price from dropping any lower because they want to try and grab more shorts. They move price up again. Okay? Now, if you go back in the charts and in the streams, I was talking about this development and this play before it came. And the reason why you need to do that is so that you can understand what was happening in real time and what I'm explaining about each movement of the candlestick, because that's what I do. I talk about every movement of the candlestick whilst it's coming into fruition, because it's the only thing that I've got. I can't make the judgment or the assumption that, yeah, Bitcoin is going to go into this range or to the upside, because there's nothing here for me to go off. It's all based on what they have done. And it's evident, ladies and gentlemen, that they do the same thing over and over again. The idea is to work out when. So I hope that answers any of your questions regarding why I keep banging on about the idea of price is irrelevant. I don't care about it. Some people do get their backs up saying, well, I care about it because I'm a holder. I want to know if I can get in cheaper or not. Okay, that is very true. Because as a holder, you're trying to work out if you're in profit when you decide to buy again, or are you at a loss if you decide to buy again when Bitcoin is cheaper. All right. This is day trading examples, because day traders only care about movement. They don't care about what the value of it is. They care about the movement because they may not hold the coin, and all they want is volatility. That's why cryptocurrency is getting pushed for regulation in terms of trading, because volatility is what traders want. They don't care about Bitcoin being a certain price because on-chain analytics would say so, or because any heavyweight with loads of Bitcoin calls that it needs to be a certain price. Irrelevant. Because that is futuristic thinking. Well, let's get to that point and we'll have another conversation. Until it gets there, I'm not going to decide and hold my portfolio that may contain Bitcoin in, okay? If I hold a lot of Bitcoin and I'm going to go on the word of a guy who also holds loads of Bitcoin, but he holds that much that it doesn't matter if it goes up or down for him, okay? There are people that hold Bitcoin that rely on everyone's word who's a heavyweight in cryptocurrency, all right, or has loads of Bitcoin. And if they say that they're buying or they're selling, they're most likely going to do the same thing, which is a shame because it's all based on value. How can you base it on value, man? We're in the adoptive stages, man. You know, value is Bitcoin's $35,958. That's it. That's what Bitcoin's price is right now. That's what it's valued at. In an hour's time, it could be more. In 3 minutes, it could be more. So what is Bitcoin's value? Yeah? Mad love and respect to everyone passing through to the channel. If you are new, be sure to subscribe so you can tune in tonight in the live stream. All right, take care of yourselves, gang. Mad love. Peace.